you've got a business bank account, you have a personal bank account, you need to get the money from the business account to the personal account. How do you do that? How do you pay yourself? That's what we're going to cover in this video. We're going to talk about how to pay yourself, like the actual logistics of making it happen, how much you should be paying yourself, and how to pay yourself consistently throughout the year, even if you have inconsistent income. I'm Seth, I'm a CPA, and I help authors have higher profits, lower taxes, and more time to write great books. And this is the point in the video where if this was polished, we'd have some sort of fancy bump music and transition. But if you've been following along, you'll know that this is my journey into figuring out how to do YouTube, and we're going to get better every video. The thing I'm trying to improve on this video is speaking more naturally and not trying to sound like I'm being held hostage. So I'm going to speak a little more quickly. That's how I normally talk. Whenever I try to speak more slowly, it sounds like I'm being held against my will. So I'm going to speak more quickly. So if you got to slow this thing down, feel free. If you haven't been following along, then we have been covering the questions that you should be asking your CPA if you just don't even know what questions you should have. If you want to get a list of all those questions, in the description of this video, there's going to be a link. That link is going to get you to our newsletter, and that newsletter will send you that PDF in the first email that you get from the newsletter. So check that out if you're interested. All right, let's jump in. So how do you pay yourself logistically? If you're an S Corp, then go back to the first video I did on entity choice, S Corp versus LLC. It's going to explain how that whole reasonable compensation works, which has to run through payroll. So you got to get payroll set up. But assuming that you're an LLC or a sole proprietor, that means you're just going to literally give the money to yourself from the business. It doesn't matter how. You can cash it at an ATM and take it out of the business account and call it personal money. You can write yourself a check. You can Venmo yourself. You can ACH it over to yourself. It doesn't matter how you send that money to yourself. For tax purposes, it's a non-tax event. That money in your business account is going to be taxed whether you distribute it to yourself or not. So it is not a deduction to your business, and it's typically not taxable to you as the owner of the business. So just take it however you want to. Second thing we're going to cover is how much should you be paying yourself as the owner for the work that you do in the business. If you're earning less than $250,000 of revenue in your business, then chances are you don't have any full-time employees. It's probably all done by you. You might have a couple of contractors here and there, but realistically, everything's you. So if that's the case, we recommend that you pay yourself 50% of your revenue. Let me explain that for just a second. The reason 50% is the number we recommend is because most businesses want to have about a 2 times labor efficiency ratio. That means you're earning $2 for every $1 of labor within your business. Whenever you're doing everything, then all the labor is you. So to achieve a 2 times labor efficiency ratio, you got to pay yourself half of the revenue. Thing 2 to think about with this though, is what is revenue? So if you sell a book for $15, is $15 your revenue? We're actually not going to use that number. We're going to use your gross profit as the revenue number that we base this 50% on. What's your gross profit? Your gross profit is the cost that you sell something for, or the price you sell something for, minus your cost to provide that to your customer. So you sell a book for $15, and it costs you $3 to produce that book, and then maybe another $2 of distribution costs and everything else, then you're going to actually just have $10 left over as your gross profit. So you would take 50% of that to pay yourself. So real easy, just take half of your revenue after your inventory costs, and that is your owner's pay. Next, how do you pay yourself consistently throughout the year if your income goes like this? Because you've got holiday sales, you've got summer slumps, you've got releases, you got launches and all that. Here's what we do. Set up a separate bank account within your business called owner's pay. You're going to take 50% of your revenue every single month and put it in that owner's pay bank account. That money going into the account is going to be different every month. But the money you take out of the owner's pay account and actually send over to your personal bank account, that's going to be a consistent amount every month. So let's say that you've decided that you need to have a $5,000 a month owner's pay. If you have $10,000 come in month 1, you had $5,000 go into the owner's pay account. You take that $5,000, you pull it out, you bring it to your personal account. You have 0 left in the owner's pay account. Let's say the next month you had $12,000 of income. So you'll have $6,000 go into the owner's pay account, but you're still only going to pull out the $5,000 you need in your personal account. That's going to leave you with $1,000, right? The reason we do that is because what if in the next month you only have $8,000 of sales? Then you'll only have $4,000 to put into the owner's pay account, but you'll still be able to pull out that $5,000. Obviously, in the real world, the math doesn't work out as clean as the example that I just made up. But that's kind of the concept and the idea of what we're trying to achieve over time. Because if it's consistently that you don't have enough money in the owner's pay account to pay yourself for what you need in your personal budget, There's a few things going on. Maybe you have an owner's pay that's too high for your business. Maybe we need to look at your personal budget and see if there's anything we can cut there. Maybe we need to adjust your percentage on the business side or change some other numbers around. The reason we do it this way is because it highlights issues that you might have in your business that we can then address, rather than just treating your business bank account like a personal piggy bank and just using it for whatever you want and then not having the money to actually grow your business. If you're not paying yourself at all from your business because you're still trying to grow and you don't think you should be taking yourself out, please reconsider that. You are the best employee that you're ever going to have. There is no one else who's going to care for your business and do what you do for your business as much as you do. And no one else is going to do it for free. So be paying yourself. Even if you're not paying yourself because you need the money or want the money, do it for your business, because at the point that you have to hire someone else to help you work in the business, if you're not already paying yourself to do that same work, then you won't have any funds available to be able to actually start paying somebody else to do it. Pay yourself for the work you do. That's how you do it. That's how much you do it. And that's how we keep things consistent throughout the year. Hopefully this was helpful. Hopefully this wasn't too quick of a video, but I'm trying to keep these bite-sized and actionable. If you have any questions about how you should be paying yourself or the logistics of doing it, or any other questions you'd like us to cover, put them in the comments. More than happy to help with those. Thanks.